Hello, my name is Mike Sinibaldi and welcome to this week's video edition of Heard on the Street. Today I'm going to exclusively be focusing on the S&P as the most recent price action has been perplexing to say the least. As of Friday's close, the Elliott wave pattern and count is unclear. At the weekly chart level, it would be tempting to call for a top given the dramatic reversal of the US dollar and commodities. Also note that price has met the upside target where wave 5 equals wave 1 at 1364. At the same time, we formed a weekly 2-bar Japanese candlestick pattern called the dark cloud cover, and the D-trend oscillator banged up against upper trendline resistance level. Another piece of bearish evidence is that the MACD is bearish, as indicated by the MACD predictor, which will turn bullish at 1382.75. So basically, there's no way that this market is going to turn bullish in the short term. While both technical and Fibonacci levels have been met in this market, the problem lies in the fact that from the wave 4 low to 1367.25, I cannot reconcile this pattern as 5 ways. Dropping to the daily chart level, you can see my current labeling of the wave structure that I mentioned at the weekly chart level. The ending diagonal interpretation seemed to be unfolding as planned until the decline from 1350.650, and this is where I'm stuck between a rock and a hard spot because I'm required to look higher because I cannot count 5 waves. Conversely, I'd also like to take the other side and be bearish given the evidence that was apparent at the weekly chart level. So what do? When I find myself having difficulty with the wave count, I like to look at the larger picture, the higher time frames, and see if I can find a way, regardless of what prices have done already, to make the wave pattern work out. I want to be clear, I'm not trying to force a count, I'm trying to be a little bit intuitive. So what do we see here on the weekly chart that I haven't mentioned? I see that we have a weekly inside bar. Well, that immediately tells me that early next week something big should happen because an inside bar is a precursor for a trend day. Secondly, what piece of evidence would tell me that the ending diagonal interpretation was clearly incorrect? That would be a close below wave 2 circle at 1290.25, because in an ending diagonal, wave 4 cannot exceed the origin of wave 2. So while I may have to readjust these wave labels for wave 4, the pattern is still valid at the current time. So let's make 1290.25 our key support level. Now back to the weekly chart level. You'll notice that I've labeled the extreme of wave 2 at 1290.25. And we still have it waves 1, 2, 3 complete, working wave 4 down. As long as this 2-4 trend line holds and 1290.25 does not get breached, the pattern remains valid. So I'll be looking for the downside tomorrow, followed by a final advance to complete the wave structure. I hope you found this video helpful and best of trading.